Hey, good morning, everybody. Welcome to December 20th, Friday. Working from home today. I hope your week has been a good one as we get ready to kind of look at some numbers today. One of, I think, the most important things that we'll see this morning when Dave gets online is the GDP. We're going to get the gross domestic product final reading for the third quarter, which will give us an idea of how our economy is growing. As well as looking at some of the markets. So, hey, I hope you're enjoying what we're doing here today. If you do, please like our page on Facebook at Statler Financial Services and share us with your friends and family. Dave will be with us here in just a moment.
577 Light FM. Happy Friday. It's 8:40 here, 20 before 9. About this time every morning, we check in to see what's going on your money, so let's do that. Head down, talk to the chief officer of Statler Financial Services, Phillip Statler. Phillip, good morning. How are you this morning?
Hey, good morning, Dave. Working from my home office this morning, so trying to get some stuff done here. But, hey, it's Friday. And it's the Friday before Christmas. Can you believe that we're going to blink an eye and it's going to be here?
I cannot believe it. I've mentioned earlier, I think it was last week, we were talking about how fast the quarter's gone so far. Feels like we barely finished Halloween, and all of a sudden I'm past Thanksgiving and probably time to start my Christmas shopping in the next couple of days.
Yeah, I would think so. And then before you know it, hey, the decade is over, and we start a new decade in 2020.
Absolutely. And we start out this morning with the news that we were kind of expecting to be a big market mover this week if there were any surprises on it, but I'm kind of glad there wasn't. The gross domestic product final report from the third quarter, government says their first estimate, or the second estimate, was the right one, and we grew by 2.1% last quarter. I gather that was what Wall Street actually expected to hear, huh?
Well, it was what was expected in terms of the economists out there. In line, there were a few little bit adjustments. Dave, consumer spending was up a little bit. Business spending was down a little bit more than anticipated. So those two things kind of, crossed each other out. And so we remained the same at that 2.1%.
Absolutely, and I got to think, we were talking about this before we went on the air, that going into the fourth quarter, any report that says consumer spending was increasing has to be a good news, because they revised consumer spending in the third quarter up from a 2.9% growth to 3.2%, which means that sector of the economy is performing better than they expected, and going into the retail rush of the fourth quarter has to make investors feel good about that segment of the economy being the growth spurt.
Well, definitely. I'm sure they are hoping that continued into the fourth quarter through the Christmas season. And that'll be one of the things we look at next month to see how it really did shape up.
And those postmortems coming almost the day after Christmas that we start getting initial rushes, they're going to be things we're going to be watching very carefully. Other than that, there's not a whole heck of a lot going on, except we need to make mention of the fact that one of America's great old smokestack industries is saying, "Mama, help me. U.S. Steel is tanking this morning, issued a profit warning, cut their dividend, and oh my Lord, I thought the Trump administration had fixed manufacturing."
Well, you're right. They did come out with that profit warning, which I'm sure is hurting their stock. And I'm guessing, I haven't had a chance to look yet this morning, but I'm guessing is also hurting our neighbor up there in South Polk County, Nucor, because they're a major steel producer too. And so I'm thinking it probably is hurting their stock this morning also.
Pretty good chance of it. My bet might be on the fact that the trade optimism, for every winner, there's a loser. Steel has always been one of the major victims and beneficiaries of trade practices, and we've always had protective tariffs on foreign steel coming in. I'm wondering if somebody's looking at the tariff agreement we got with China, and U.S. Steel doesn't like something that's in that.
Well, it could be, but that would be going forward, right? And so they're warning on profits, current profits, and so I don't know that would be the forward-looking thing if that was the issue, but they're really giving guidance on the current quarter, and so I'm not so sure that that's where it's coming from. It may just be they're had an off quarter.
No, that's a possibility as well, but it's certainly not good news for one of our old great smokestack industries in the country and the company. You've got a bunch of reports from people that we've actually heard of. Earnings season may be over, but there's a few stragglers we need to talk about.
There are, and the biggest known name is going to be Nike. Nike reported, and they beat by 12 cents a share. Revenue came in above what forecasted on Wall Street. Now, their shares are under some pressure this morning, however, because North American sales were off a little bit. But they're really being propped up by the Jordan brand. The Jordan brand in the quarter hit $1 billion in sales for the first time ever. And so I'm thinking we'll continue to see that be a force.
$1 billion worth of sneakers
in the quarter, and just one style, just the Jordan brand.
Good God Almighty! I got that beyond just going agog. I got to tell you.
But they are trading down this morning because of that, 1.1%, down below $100 a share right now.
Poor babies.
Yeah, I know. I can tell you feel sorry for them.
Yeah, they might have to renegotiate the deal with Colin Kaepernick or something.
Hey, we've got BlackBerry reported. They're kind of the old dinosaur out there when it comes to cell phone technology and smartphone technology. They did earn 3 cents a share, a penny above estimates. Revenue came in ahead of forecast. And so they said that they were really impressed that they were able to put together some sequential revenue growth years. They're traded on the Toronto Exchange, Dave, so we don't really have any numbers on them. They're not a U.S.-based company, so we don't have much on them. But we had CarMax come out.
Yeah.
CarMax actually missed this last quarter by about 12 cents a share. Revenue was above the forecast, though, and their comparable sales were up a little better than expected. So they're just getting hit, I guess, on the miss on the estimates because they're trading down 3.75% this morning.
Yeah, they're one of my big losers this morning.
Really? So then I got the last on the transportation industry, Winnebago. We had one of your favorites, right?
One of my old-time favorites because I'm from up there.
So they beat by 15 cents a share. Revenue came in above forecast. They had a strong quarter of both motor home sales and towable sales, travel trailers. So good things happening there. They're up 4.3% this morning.
Oh, that's cool. Resetting the table for the morning, and the way we're going up, I think we can reset the table with fine china. Dow Jones Industrial Average yesterday up 137.68 points. NASDAQ up by about 59.5. Standard & Poor's up by over 14. Again, 3 more new all-time closing records. And the rate the NASDAQ's going up, Phillip, we may be able to see a 9,000 NASDAQ index before the end of the year. 88, 87 is not that far away. How are we doing 45 minutes before the market opens up this morning?
Right now, Dave, we got green ink really across the board. The Dow's up $47. The S&P 500 is up almost $4, and the NASDAQ's up $22. So everything's going well there. If we look at the commodity side of the index, we got a little bit different picture there. We've got gold down $1 an ounce. We've got silver up about 2 cents an ounce. And then we got crude oil up from where it was when you and I talked yesterday again, but down from the close. It's at $61 a barrel right now.
Yuck. I got no two ways about that.
Yeah, I know. And on the other side, though, the other thing I did see today is the 10-year Treasury yields are going up, too, above 1.95%.
Yeah, I was going to say, I think we're up like 15, 20 basis points over the last couple of weeks. That indicates some faith in equities at the very least, doesn't it?
Yeah, I think so. It does look that way.
I think so. The world markets, by and large, they got kind of a mixed bag over in Asia. Japan was off by a bit, but the Chinese mainland and Hong Kong markets all up this morning. Europe generally trading up midway through their day today. Phillip, advice always needed for making sure 2020 is a good year for your retirement account. How do I make that appointment with you?
Dave, I know it's the holiday season and finances are the last thing, investments are the last thing on everybody's mind right now. But please, when you get through the holiday season, let's sit down and make sure you don't have too much risk in your current portfolio by calling 382-0037 and schedule your financial x-ray review. Catch our website at statlerfinancial.com. Follow us on Facebook, Statler Financial Services, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And back here Monday to find out what's going on as we go into the final day of trading before the Christmas holiday. Phillip, thank you so much, and we'll see you on Monday, all right?
All right, man. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. Remember that first.
Hey, folks, again, I want to thank you for joining us today. Hey, I hope that you have a great weekend. Don't get killed in that holiday shopping stuff. And I look forward to speaking to you again on Monday before the holiday. Have a great day. I'll talk to you soon. Bye now.